In this article, we will discuss the current state of Paramount Global stock in 2024 and our investment strategy. Please check out the related links in the summary section. Also, if you find this video useful, please like and subscribe to our channel. Introduction. Based on the latest information on Paramount Global Nasdaq Para stock in 2024, we explore the challenges facing investors and how to solve them. In this video, we will discuss the current state of Para stock, future projections, and investment strategies based on the latest market data and expert analysis. The current situation of Para stocks. The first is the stock price and its current status. Paramount Global's stock price has declined approximately 27.5% from the beginning of 2024 to the present, and is trading at approximately $10.72 at this time. This decline has been influenced by poor performance and overall market trends. The second is analyst ratings and predictions. According to the latest analyst ratings, Para stock is rated a sell by many, with 10 out of 21 analysts rating it a sell, 7 rating it a hold, and 4 rating it a buy. The average 12-month stock price forecast is $13.29, with a high of $20 and a low of $9. The overall view is very cautious. The main issues and their background. Paramount Global's earnings are being squeezed by increased competition in the streaming services and traditional media sectors. In addition, a restructuring under new management is underway, and the impact of this restructuring is also a cause for investor concern. The second is the impact on the market as a whole. The challenges facing the media industry as a whole cannot be ignored. In particular, growth in streaming services has been lower than expected and advertising revenues continue to decline. This has caused many media companies to revise their earnings forecasts downward. Now let's look at investment strategies and solutions. The first is to invest for the long term. In the long run, Paramount Global is expected to recover its performance through restructuring and the implementation of new strategies. In particular, strengthening streaming services and launching new content will be key. This is expected to expand and stabilize the revenue base. Second, we reiterate the importance of diversification. Due to the volatility of the media industry, it is important to consider investing in other stable sectors for risk diversification. Diversification reduces the risk of being dependent on a particular industry. Third, follow the latest information. It is important for investors to always follow the latest market information and company developments. Use official investor pages and reliable news sources, and be sure to respond quickly. Fourth, use reliable sources of information. It is recommended that you use data from multiple reliable sources as a motto when making investment decisions. For example, MarketBeat, Yahoo Finance, and Paramount Global's official investor relations page can be helpful. Summary. Paramount Global's stock in 2024 continues to face challenging conditions in the short term, but there are signs of recovery in the long term due to restructuring and the implementation of new strategies. Investors are urged to make prudent investment decisions by diversifying risk and following up on the latest information. The key to success will be to keep abreast of the latest market and corporate developments and invest at the right time. We will now also discuss alternative investment strategies and practices for investing in Paramount Global shares, in case the aforementioned do not satisfy your wishes. For those of you seeking information on Paramount Global Para stock, we suggest other alternatives that you can try. Based on the latest market trends, we will explain in detail the specific ways and reasons to diversify risk, new investment techniques, and use relevant information. The first alternative is to diversify into technology stocks. The reason is that while the media industry is volatile, the technology sector is one that is expected to grow over the long term. In particular, the AI, cloud computing, and cybersecurity sectors are expected to have high growth rates. One specific way to do this is to invest in cloud services companies. Companies that provide cloud services, such as Amazon and Microsoft, are expected to continue to grow. Second, invest in AI-related companies. NVIDIA and Alphabet are leaders in the AI field and are promising investment targets. The second alternative is to adopt ESG investing. The reason is that investing with environmental, social, governance, and ESG factors in mind is a good way to invest in companies that are looking for sustainable growth over the long term. And to manage risk, a concrete way to do this is to buy ESG funds. By purchasing ESG-focused ETFs such as the Vanguard ESG US Stock ETF ESGV or the iShares MSCI USA ESG Select ETF SUSA, you can diversify your investments across a diverse range of companies. Second, check a company's ESG score. Check each company's ESG score and invest in companies with high ESG ratings. The third alternative is to shift to high dividend stocks. The reason is that high dividend stocks provide stable earnings and mitigate the risk of stock price volatility. Specifically, first, invest in high dividend yielding companies. High dividend stocks in the telecommunications sector, like AT&T and Verizon VZ, are stable sources of income. Second, use a dividend reinvestment plan DRIP. This is a plan that automatically reinvests dividends to build long-term wealth. The fourth alternative is to invest in index funds. The reason is that by targeting the growth of the overall market, you can diversify the risk of individual stocks and expect stable returns. One concrete way is to buy S&P 500 ETFs. Buy ETFs that are linked to broad market indices, such as the SPDR S&P 500. ETF SPY and the Vanguard S&P 500 ETF VOO. Second, invest in a global equity index fund. Choose a fund that diversifies globally, such as the Vanguard Total World Stock ETF VT. The fifth alternative is to invest in real estate investment trusts REITs. The reason is that REITs allow you to invest indirectly in the real estate market and offer high dividend yields. Specifically, buy commercial REITs. Invest in commercial real estate REITs such as Simon Property Group SPG and Prologis PLD. Second, buy a residential REIT. Choose a REIT that specializes in residential real estate, such as AvalonBay Communities AVB or Equity Residential EQR. The sixth alternative is to invest in the financial sector. The reason is that the financial sector often performs strongly during economic recoveries and is more profitable during periods of rising interest rates. One specific way is to invest in bank stocks. Major bank stocks such as JP Morgan Chase, JPM and Bank of America BAC are stable. Second, invest in fintech companies. Financial technology companies such as PayPal PYPL and Square SQ are also expected to grow. The seventh alternative is to diversify into commodities. The reason is that commodities such as gold and oil are effective inflation hedges and risk diversifiers. The first concrete way is to buy gold ETFs. Buy ETFs that are linked to gold, such as SPDR Gold Shares GLD and iShares Gold Trust IAU. Second, buy oil ETFs. Use ETFs that are linked to the oil market, such as United States Oil Fund USO and IPATH S&P GSCI Crude Oil Total Return Index ETN Oil. The eighth alternative is to invest in digital assets. The reason is that virtual currencies and blockchain technology are areas of future growth and will help diversify your portfolio. Invest in major virtual currencies such as Bitcoin, BTC and Ethereum ETH directly. Invest in blockchain-related companies. Square SQ and NVIDIA NVDA are involved in blockchain technology and can indirectly invest in digital assets. Finally, you can diversify your risk and aim for stable returns by experimenting with a variety of investment methods and not relying solely on Paramount Global's equities. Each investment strategy is based on the latest market trends, and by implementing a combination of each method, you will be able to build a more effective portfolio. It is important to constantly update your market information and be flexible in your investment decisions.